The payments industry is ever so slowly approaching a tipping point with respect to whether the mobile wallet could become a viable everyday payment tool. More and more companies are being introduced to the concept for the first time, and many companies are beginning to make those first mobile-related investments. I'll be discussing the 5 mobile payment trends that we've watched come to prominence in 2014. The first trend would be the emergence of full financial mobility. Financial institutions are in the early days of being able to connect with consumers across all aspects of their financial life. Already, we're seeing consumers in many markets can view their account history, send money to friends, and deposit paper checks all from their mobile device. Of course, the mobile phone also has the potential to be transformative in the way that consumers shop and pay for goods and services both online and in-store. While banks may sit in a favorable position to become the de facto mobile wallet provider due to their long-standing relationship with consumers, we also see non-traditional financial companies from retailers, mobile networks, and mobile phone manufacturers all entering the mix. The second trend is that payments are becoming more invisible thanks to mobile. Increasingly, the payments transaction is becoming a more invisible part of the purchase decision by a consumer. The challenge for many consumers today attempting to make a purchase on their mobile device is being able to easily enter those payment details on devices with such small screens. As a result, companies are reducing the steps to purchase and ultimately the friction of making such a purchase through the use of one-click functionality. The third trend is how CouchCommerce is emerging among more developed consumers. Tablet devices have previously been dubbed couch devices because consumers often reach for them and may in turn make a purchase while lounging on their couch at home. Such tablet-driven mobile commerce purchases is a more prominent trend in the world's most developed markets, which tend to have a higher tablet penetration rate than those consumers in emerging markets. The countries with the greatest tablet-driven mobile commerce per capita in 2014 includes the likes of the UK, the US, Australia, the Netherlands, and Denmark. The fourth trend is the emergence of the UK as a hotbed for mobile payments. The last year has really been a breakout one for mobile payments in the UK, with the market ranking #1 for total m-commerce spend in 2014. Euromonitor estimates that consumers there will spend over $800 in 2014 on mobile commerce, with almost 80% coming from purchases made on tablets over mobile phones. Despite this country's mobile commerce growth being driven more so by purchases on tablets, the UK does still rank high, both in terms of remote and proximity payments made on mobile phones. The fifth trend is how in-store payments are beginning to gain traction in the world's most developed markets. Although the concept of using your phone in-store to execute payment certainly has generated a lot of buzz in recent years, this type of mobile payment remains far less common than remote mobile purchases. 3 of the world's most developed markets had the highest spend of proximity mobile payments on a per capita basis in 2014. These markets include Australia, the US, and the UK.